Gold isn't moving like a normal market asset right now. It's moving like it chugged an energy drink at 3 a.m., ignored every warning sign, and sprinted straight through the ceiling. And that should make you uncomfortable because for nearly 40 years gold was boring, returning about 6–12% a year, slow and predictable. Yet over the last 5 years it's averaged nearly 20% annually, which simply doesn't happen in a healthy, well-functioning world, meaning either the global system isn't as stable as it looks or humans are far more emotionally attached to shiny rocks than we admit. And either way, gold is likely hitting another all-time high as this video plays. But here's the strange part. Nobody agrees on why this is happening. Not traders, not economists, not analysts. Everyone has a theory but no clean answer. Though one thing is clear. Something big is happening beneath the surface. Because gold isn't supposed to behave like this. And before blaming inflation, yes, rent and food prices are brutal. If inflation were the main driver, gold would have exploded back in 2021 when CPI went wild. But it didn't, meaning inflation is only part of the story. And the more unsettling explanation is that foreign countries are quietly losing faith in the US dollar, quietly in the way someone deletes all their couple photos before announcing a breakup. Because while the dollar has been the global reserve currency for decades, central banks aren't dumping it outright. They're slowly diversifying away from it, reducing its share of global reserves from over 70% to 58%, a shift worth trillions. And that money isn't going to the euro or yen, it's going into gold, which has become the monetary backup plan, with central banks buying over 1,000 tons a year for 3 straight years and 2024, marking the biggest gold buying year in history. And this isn't a fad but institutional anxiety, a hedge against debt, inflation risk, and over-reliance on one system, even as the dollar remains dominant, because what's changing is trust. And gold doesn't rise when trust is high. It rises when stability starts to slip, which is why this move matters, especially now when stocks are near all-time highs. AI is priced like it's already replaced half the workforce, and risk assets are partying while gold is also breaking records, something markets rarely do, leaving us with stocks pricing a perfect future, gold pricing a troubling one, and bonds pricing confusion. And that's why this gold rally matters, not because it's shiny, but because of who is buying it and why, as the biggest players in the global financial system quietly reposition while almost nobody is paying attention.